right, good morning. So I had a really nice trade on S&P today. Here is the schematic. I'm just going to break down that trade from this session for New York. So this was a sell trade, and as the picture on the screen shows, what I'm looking for is for price to go above London session. My London session range is from 2 a.m. to 5 a.m. So I'm looking for price to go above that range, shift structure down, and then give me an entry to go short. All right, and I want to see that anywhere between around 9:30 a.m. to 10:45 a.m. That's my entry window for the actual button clicking, right? So I want to be inside of that trade within that time window. But it helps to see the liquidity grab happen around 9:30, right? So it can happen within my entry window or just before. In today's case, it actually happened just before market open. All right, so taking a look at the chart here, I've got S&P on the left, Nasdaq on the right. That will never change. But if you look at S&P on the left, at 9:15, I've got price going above the morning highs. Okay, so to take a look at this, my London range was at 5 a.m. That was the high of my London range. But as you can see, right at 6:30, the high was taken out. And sometimes that happens. What I do is I just draw a whole new line out and I push it out into the future closer to market open. In that same area, you can also see that we had the high of the week coming from Monday. So if I just zoom back out here, you can see that was Monday's high that was also taken out early this morning. But my main focus was on this large wick here that happened at 9:15. When I saw price do this, I dropped down to the 5-minute to watch for a market structure shift lower and look for my engulfing pattern, since the liquidity grab was happening just before market open. If you look at this same price action over here on the right on Nasdaq, you can see how Nasdaq couldn't even get above London session high. So I took this as some divergence and I prioritized selling on the S&P. So if I drop down to the 5-minute, here you can see there's that 6:30 a.m. high that took out my London session early before market open. Over here at 9:20, you can see here is the candle taking out that 6:30 a.m. high. Now, as far as targets, what I really liked, if you look down here at London session low, I had equal lows as well as some low resistance liquidity from 4 a.m., 3:55 to 4 a.m. area. These lows are relatively equal. So this for me was an area that price is likely going to want to engage with to the downside. Right underneath London low, you can see that I have a 4-hour buy side imbalance that had not been engaged yet. So that was another reason as to why I wanted to target liquidity to the downside for this sell trade. So taking a look up here for the entry at 9:20, what I'm going to do is I'm just going to go forward to the next candle and I'll show you where I got my entry. So if I just go to the next candle, at 9:25, you see we got this down close candle that's within the range of the previous candle. So if I just zoom in here, I'm going to mark out what I need to see to have a bearish engulfing. I need to see a candle closure below this 9:20 candle. That's what I want to see before I move down to the 1-minute time frame. So if I go to the next candle, I get that right here. 9:30's candle closes outside of the range of 9:20's candle. This is my bearish engulfing. So from here, I noticed I had an inversion fair value gap on the 5-minute time frame. This allowed me to take the entry from the 5-minute time frame, because normally I drop down to the 1-minute and look for an entry off of this structure. But as you can see right here, there was a small inversion fair value gap right there. And all I did was set a limit sell order with my stop just above the liquidity grab itself from 6:30. So price is engaging with the liquidity pool from 6:30's high and shifting below that. So I did not need to cover. I didn't need to cover my stop above this high here from 9:20. Instead, I just cover above the area of liquidity that was taken, and then I targeted 3R to the downside. So 3R did put me close to the 4-hour imbalance down here. Instead of just going down here, I chose not to do that because I have a consistency rule with the funding account. So I don't try to go after large profits in a single trade. So instead, I just kept it at my 3R. But I did believe that price was going to go down into that area. And you'll see that in the recording. All right. So if I just hit play here, I did get my entry on the next candle and price did deliver down into that target. All right. So that was my trade from this morning, and here is the recording.